Well, overall markets are calm and trending right around the middle, up and downs. NASDAQ down a bit, Dow up a bit, but down from where it was earlier today. After the PCE print came in about as expected. Also, Tesla up, then down, kind of around the middle. If you're interested in the economy and how it is impacting stocks and Tesla going forward, please watch to the end today. I have an extremely comprehensive analysis of what happened with regard to the PCE. It's not the stuff you're going to see in the headlines. It's not even the stuff you're going to see if you read further down in the story. Gary Black has contributed to what I've got to say this morning, as well as others. You've got to really understand the full picture. Not sure the bond market is reading the full picture this morning, as rates have dropped nicely, and I should be thrilled about that, but I'm not sure that as the day progresses, we might see a turnaround of that. Elon Musk says that he has not been in any discussions with Trump or the Trump campaign regarding cryptocurrencies or a role in an eventual government should Trump win. He denies all the news reports about such discussions. What he never did say was that he hasn't had any discussions at all. So some of the reporting out there right now is suggesting that Trump is in some kind of discussions with Musk and Trump talking together about something. But at least with regard to those two issues, whether Musk would like to be part of the future administration and or anything about cryptocurrencies, apparently those two discussions have not been taking place. That's at least how Elon Musk is reporting it this morning. Also, this from Teslarati, Tesla's Elon Musk calls out President Joe Biden for union-loving EV narrative. The quote is that Biden cares a lot more about whether Tesla is unionized than whether Tesla is saving the environment. This could also be said to be true for an entire group of people out there that are way more concerned about Elon's positions on this, that, and the other. Not getting into politics this morning, but people are way more concerned about Elon's politics than they are on whether or not they're building a car that makes sense for your family in terms of safety, in terms of cost, in terms of all of the specs on the car being better than any other car on the road. People are like, no, never mind. I'll buy this other car because Elon is bad. Anyway, this is from Unplugged Tesla this morning. Cybertruck goes uplift Tesla, introducing world's first police Cybertruck ready for patrol use now from here to Mars. And show a picture. The picture wasn't that exciting or interesting, so I'm not going to bother. But you can look it up on X if you wish, under either Unplugged Tesla or under Upfit Tesla, either one. They are showing the picture this morning. This from Alex _ AVOIGT, Avoit, I guess. Tesla is the #1 global automaker rating. Tesla leads with 83 points, far ahead of everyone. The Global Automaker Rating 2022 is a definitive look at how global automakers rate in the transition to zero-emission vehicles. Tesla and BYD are at the top of the ratings in this first edition of our in-depth analysis. They evaluate the top 20 manufacturers in the world based on their sales, actions, and ZEV strategies in 6 major global markets. All right, #1 again. Well, this is Randy Kirk, of course, and the ways you can help the channel include hitting the like button, hitting the subscribe button. Do you know people unsubscribed me yesterday because of my position on politics? Sounds a lot like what I was just talking about with Elon. They weren't interested in the quality of the content of my information about Tesla, the economy, the stock market, or Tesla stock. What they were interested in is that somehow my position on the trial yesterday should change, whether what I do each day on this channel is valuable to them or not. I don't think that's very smart thinking. It certainly isn't the way that I evaluate who I listen to, I can tell you that. All right, Scott Walter later today. I don't want to miss that. Tonight on Good News Friday, Sadly, Larry Goldberg is still out of the country, and it's impossible to work that out with him. It's like 2 o'clock in the morning when I would like to be talking to him. But on the other side of the coin, Larry probably is joining me tomorrow morning. So you don't want to miss that either. So that's why you want to hit the notify button. And then thank you for the Patreon memberships that are piling up this month. Well, okay, there's been a few, and I'd like to get a few more. There's still time later today. I'd love to have you join Patreon. Nothing in the PCE would suggest that we're getting interest rate cuts anytime soon, even though the bond market responded this morning with some buying. We'll look at those numbers in just a second. The personal consumption expenditures PCE price index increased 0.3% last month, according to the Commerce Department. That matches the unrevised gain in March. In other words, there was no change in March, and now April turned out to be the same. Now we're getting the April information at the end of May, which sadly is an awful long, that's an awful long look in the rearview mirror. I suspect, though, it's not much change at the end of May either. That's just me, but that's how I look at it. The PCE price index rose 2.7 year on year after advancing 2.7% in March. Economists polled by Reuters had forecast it would climb 0.3 on the month and to 2.7 on a year-on-year basis, which is exactly what it did. Core PCE subtracting food and energy prices rose 0.2% month to month. That is the only thing that beat the forecast. That probably is the knee-jerk reaction going on this morning with regard to the stock market itself and also with regard to the bond market. In the 12 months to April, however, the core index rose 2.8, exactly as expected, and exactly the same as last month's rise. So the fact that we have a 1 month a slight advantage, I think that's a nothing burger, but we'll talk more here. There's more to the story, okay? Consumer spending, which accounts for more than 2/3 of U.S. economic activity, most people say 70%, increased by just 0.2%. That is down from 0.7% rise in March, which causes me once again to ask the question, why do people think we're going to have a solid second quarter GDP increase if consumer spending is only up by 0.2% in the month of April, the first month of the quarter? I also we'll see more evidence as we go forward. Revised gross domestic product data released on Thursday showed consumer spending moderated to 2% pace in the first quarter from the brisk 3.3% pace in the October to December period. So the reason the markets are not reacting to the PCE with a big increase as a result of that one knee-jerk aspect, Gary Black has this. He says core PCE came in as expected at 0.2% month over month and 2.8% year over year, but the annualized 6-month core PCE was 3.2%, the highest since last July. Okay, what does that mean? You take the last 6 months and you annualize it. And this, according to Fed Chairman Powell, is the number one thing that they look at. They look at that last 6 months figure. And if you annualize that, it is the highest it has been since last July. That's why I think that later today we might see the bond market. Oh my goodness, if you really dig in, this is what's going on. The other thing is the overall market should be looking at that expenditure level and wondering what's happening to the consumer, as I've been talking about now for weeks. To the extent that trueflation is helpful at all in this anymore, and I think they could be, at least directionality. And remember, trueflation is going to be today, not 6 months ago, not 2 months ago, not last month, but today. They have been showing an uptrend now for the past several weeks, and they now stand at 2.67%, but directionally up, solidly up over the last 2 to 3 weeks. All right, now this article really blew my mind this morning. Bank of America, they can check expenditures really, really easily. They've got your checking account, they've got your savings account, they've got credit card accounts, they've got all kinds of real-time information, and it's really easy for them to see what the trends are looking like. So I've seen a lot of their reporting in the past. I've brought onto the channel before because their reporting seems to be some of the best out there, at least in my humble opinion. From Fortune magazine this morning, consumers might be squeezed by inflation, but it seems their wallets aren't tight enough to stop them spending on enjoying a good time. That's what Brian Moynihan is seeing from the data at Bank of America. He's the CEO. But while shoppers are still splurging on experience spending, they're consciously pulling back on more day-to-day purchase, such as groceries. And the story is the same on the commercial side, said the CEO, where spending is still there, but the purchasing is slowing. Okay. 70% of the economy is the consumer. 15% of the economy is businesses. That leaves 15% for government. Government does not have any more money. They don't have any more bills that have been passed that allow them to increase their spending in the second quarter or third quarter or fourth quarter compared to last year in any significant fashion. And that's only 15% of the business. So we do have things like the increase or decrease in inventories, increase in or decrease in the balance of trade, which also impact, but that impacts at about 2 or 3%. So speaking at the Alliance Bernstein Strategic Decisions Conference in New York this week, Moynihan said that the behavior he's seeing from clients reminds him of the mid to late 2010s. He explained that the money moving through consumers' accounts is currently around $4 trillion a year, comprising of transactions such as cell payments, debit and credit cards, cash, ATMs, and so on. For the year-to-date, growth in these transactions has been approximately 3.5%. That's decent. But that number doesn't mean a lot unless it has context. In May of 23 versus May of 22, it probably have been more like high single digits, maybe even double digits. So it slowed down coming through the summer of last year, and it sits at a level which is about where it was in the low growth, low inflation, environmental economy, where it was in 2016, 17, and 18. The only problem with this theory is that in 2024, the U.S. doesn't have low inflation, instead of sitting stubbornly at 3.4 in April, well above the 2% target. This high inflation is why people may be spending less, as B of A data has found, on general purchases and are splurging instead on experiences. But who's spending the money on experiences? Folks in the 50% plus category. The top 50% of earners are spending money on experiences. Everybody is cutting back on these day-to-day expenses, but especially those folks in the bottom 50%. The way people are spending money is consistent with what you read about, and it's on experiences. It's still driven at margin by travel, entertainment, and things like that, he continued. Analysts need not look far for evidence of this phenomena. Just Google Taylor Swift. The singer-songwriter has smashed world records with her Eras Tour, which grossed more than $1 billion, has become an economic phenomenon in the nations it has visited. This was $5 billion last year, but that hasn't been repeated this year. The story isn't the same across the rest of the market, however. Moynihan said other things have moderated. Except for insurance payments, it has slowed down. We got to keep the consumer in the game in the U.S. economy because it's such a big part of it. But notice that he just rushed by that insurance payment thing. Car insurance and homeowners insurance way up this year. Moynihan, who's led B of A since 2010, has warned the Fed before about pushing the consumer too hard and crippling a major driver of the economy. Consumers are a little more tender, he added, saying shoppers are now going to 3 supermarkets instead of 2, perhaps hunting for better prices between the competitors. Moynihan, a Brown University alumni, said businesses are behaving in a similar way to consumers, still managing to get by, but without booming spends. They're basically saying, I'm making money, I'm fine, I'm worried about every possibility you could lay out. The wars, the China trade wars, elections, but everything's okay. But because it costs me more money to borrow, I'm being a little less aggressive, Moynihan laid out. The pairing of consumers and businesses form a huge part of the American economy, Moynihan points out, and their message is the same. You know what? I'm being careful. I'm slowing things down. I'm still growing, still feel good about my overall business, but I'm not hiring as much. I'm not buying equipment as much. In fact, I'm not making a commitment to software purchases as fast. On the other hand, it's not I'm laying off a lot of people. I'm trying to manage my business carefully. I've been saying now for, I don't know, the entire time I've been on the air, that the warnings all last year of pending economic doom caused businesses everywhere. And I think some people to really be cautious and make sure that their cash balances were good. And I think businesses in particular took this warning, and that's why they're in better shape this year. Signs of stress, namely a wobble in credit risk ratings, haven't been observed, Moynihan added, either on the consumer or the commercial side. I've seen lots of reporting that suggests that people are falling behind in automobile loan payments and also in credit card payments. But I did see articles just the other day saying, no, that's now flattened off. Markets are still calm this morning, but let's go ahead and take a look and see how any of this is maybe changing things as the day progresses. Tesla, for instance, which had been up a buck or so and then was down a buck or so, is now up 25 cents. We've got the Dow Jones, which was up strongly earlier this morning, is now up only 15. The NASDAQ, which was up a little bit, is now down 47.75. And the S&P, which was also in the green, is now in the red at 5.24 down. We've got the Magnificent Seven down, except for NVIDIA we got, so four down and three up. But listen to this, Meta down 5, Amazon down 3, Google just a little bit down, Tesla up 13 cents, Apple up 91, and NVIDIA up 649. So the activity right now, very mixed and tending also again down. We've got Costco after an excellent report, down 24.34. But quite frankly, it had been up, I think, 100, if I remember the number. Yes, I think it was up 100 points over the last 30 days. So taking 25 points off of that on the news, not totally shocking, but that's a pretty big hit considering that they really hit their numbers quite solidly and gave good guidance. Their consumer is still buying. They're much more in that upper 50% group. We've got the Cathie Woods are mixed this morning. Let's go up again and look at these numbers. Oops, the Dow has now fallen into negative territory. It is down 0%. It is also up 0%. The NASDAQ is down 0.31. The S&P is down 0.11. And the Tesla is now down again. It's now down 0.27%. And Apple is the only one still hanging in there. I'm sorry, NVIDIA barely at 0.41% up. All right, let's go ahead. It looks like things are starting to go down again overall. The trend is definitely down at this point. We'll take one last look after we take a look at some of these other indicators. So let's go first, of course, to bonds. We have got the 10-year has the rate has fallen. So in other words, people are buying those bonds. The 10-year is down 5.9 basis points at 4.495. That's a good number. Under 4.5 is a fantastic number. Again, not clear that we will still be looking at that same number later in the day as people dig into that PCE report. The 2-year is also down 4.4 basis points, and the 2-month is up call it unchanged. So we are now slightly under 100 basis points on the 2-month difference there, the inversion, and on the 2-year, this is so hard to do, in about just under 40 basis points difference on the 10-year versus the 2-year, which is now kind of where it's been. So it was as low as around 35.30, as it's been commonly up around 50 basis points, right now sitting around 40. All right, let's go ahead and take a look at oil. We have got oil this morning. Call it unch, as Bradford Ferguson likes to call it unch. Actually, right now, exactly, it says unch. We've got Brent up just a tad. Now oil down just a tad. Texas Intermediate down just a tad. We've got natural gas down 0.23. So again, not much change. Gold also unchanged, call it unchanged. We have got copper down 0.50, but still sitting at 4.635, but way off the 5.2 that it was a week or so, a couple of weeks ago now. We've got the dollar sliding a tad this morning based on the bonds going down, so the dollar will typically go down as the interest rates go down. We've got the Bitcoin up, I'm sorry, man, down 930 right now at 67,849, continuing to be right in the middle of its range. And there you go. So the indexes are still wavering. That's the headline right now. So the Dow is back up slightly. So yeah, things are just kind of moving all over the place. Let's go back. We'll take a look at Tesla here in just a second. Before I do that, I know I've been banging on day after day after day about that two-part interview that I did with Brian Huang, but you want to go back and look at that interview. You want to look at both parts, the part from Tuesday and the part from yesterday. It was very, very important about AI, about the AI spend that's taking place, about NVIDIA, about the directionality of NVIDIA, about what that might look like in the future, Brian's view of how much of this equipment that people are going to need over time. Will there be a point at which everybody will have all the compute that they need? What is that impact going to be on electricity? What is the impact going to be on the grid? How in the world are we ever going to build out enough infrastructure, enough new power supply, enough grid, enough transformers, et cetera, in order to meet the demand? And the answer is, doesn't look possible. But there's only one way that it can happen, and that's with Tesla's battery storage and combined with solar. Great two-part interview from Tuesday. I'm going to put the cards up, both cards up right here, so you can go back and check those out. Remember, we got Scott Walter coming up later today. Let's just one more time go back and check out what Tesla is doing as of this exact moment, down 48 cents. So continuing this up and down, right around the break-even number. And the market itself is definitely trending down. NASDAQ is now down 84. Again, all of the NVIDIA now has gone into negative territory as well. So yeah, the trend is definitely down. I believe that's because the PCE number, not that great, and the market really needs a 10% correction. I've been talking about that for a while. This could be the continuation of that correction this morning. Okay, that's all I got for you. It's been great talking to you.